Good morning, everyone, and welcome to the Ankerstar Wealth Morning Show. I'm your host, Allison Ankerstar, and today we'll be talking about the summer swoon in the markets, the failed Russian revolt, and the amount of money most Americans need to retire. But before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. Last week was the first down week in the last 8 for the markets. What does that mean for summer?
Hey, good morning, everybody, and good morning, Allison. Hopefully, everybody had a good weekend. When you look at today's markets, starting off in the red today, pretty much across the board, and it was red last week too. So, what's going on overall? Well, generally, markets do, if you look historically, have around a 5% summer swoon anyway. So, it is that time of year where honestly, a lot of people are on vacation because their kids are out of school and people are a little bit distracted so the volumes are down, I should say, from what you would normally see for the rest of the year. So I think that leads to a slight sell-off once you hit June and then on into August. That's nothing to really trade around or make major shifts for. It's just like an awareness that generally happens. As far as the numbers last week, there's a whole bunch of them in this article. Probably better representations. Just look at the NASDAQ. This is a year-to-date chart. So you can see year-to-date up here. So again, up, year-to-date change 27.87% going into today. So, the fast money on Friday show was talking about, is this reversion to the mean? Is this a sell-off? What is this? And it's like, well, it's hard to tell, right? There could be a combination of all of them. Things have run up a lot, so it's time to take a breather, up into including Apple. Needs to kind of take a breath because it keeps hitting new highs every day. So overall, the NASDAQ and the tech names are up big, 28%. If somebody told you at the beginning of the year, it's like, hey, you're going to be up 28% of the year. Are you going to be happy? Yes. Well, so even if the NASDAQ flatlines from here, we've still had an amazing 2023. So you can't expect it to turn around and go up another 28% from here, right? That's just not the expectation. When you look at the S&P 500, which is this chart again year to date, up, down at the bottom here, you can see up 13%. So about half of what the overall or what the tech names are up. And the tech names are carried by, kind of the big seven, if you will, if you heard people talk about that. So all in all, I would expect things to come in here a little bit of a breather. We've got a market commentary coming out here probably today, maybe tomorrow, talking about a little bit of a expectation management going into the second half of the year. But all in all, just temper your expectations. Things are not going to continue to scream higher, but there are always opportunities out there.
Next, the Russian head of the mercenary group attempted and failed at the coup this weekend. What does this mean for the Russia-Ukraine conflict?
Yeah, so when you really look at, the headlines are going to be how weak Putin is, going into this week. And remember this, though, and again, I've got a couple of master's degrees studying this sort of stuff when I was in the military at Maxwell Air Force Base. And so the dictator, if you will, or the leader is much stronger after an attempted coup than before, because now they understand that there was a perception of weakness, that somebody on their inner circle attempted to take them out. So for anybody who's carrying the narrative forward that this shows that Putin is weak, they're absolutely wrong. He's going to come back from this stronger than ever. He survived it, so he learned from it. So he will generally, historically, they weed out their inner circle, literally sometimes by killing them off. Or not just firing them, but actually removing them from the planet, that sort of thing, to strengthen the hold they have. So I would have no expectation that Russia is going to become weak coming out of this, or Putin's going to look weak coming out of this. If anything, it'll be stronger. It'll be more emboldened with everything he's got going on, including the Ukraine. So this is including Ukraine. Excuse me. So if folks are carrying the narrative forward in the mainstream media today that maybe this will help wrap up the Ukraine-Russia situation, conflict, I don't think it will. I think if anything, it will drag it out because of this event, maybe for a couple years. Right? Yeah, we don't know exactly how it's going to play out, but the fact that there was an attempt against, what he thinks, I'm sure, is he's the strongest leader in the world. It probably means he's going to be, bounce back stronger and bolder than ever. So I would have no expectation this thing will wrap up anytime soon.
Last, CNBC ran an article at the amount most Americans need to comfortably retire. What was that number, and do you agree?
Yeah, so here's the article, CNBC, $1.3 million. Now, I will tell you, you look at $1 million differently through life, and and again, it does get inflated away, right? We just had a year of 8% plus inflation, which means that $1 million doesn't buy what $1 million used to, right? So there's if you flashback 30 years to my childhood, $1 million was that's all you would ever need, right? It's all anybody would need is to get to millionaire status. And it far more depends on cash flow and the life you lead, sometimes called the burn rate that I talk to folks about, is what sort of lifestyle do you imagine in retirement? If you were in your 30s and 40s and you already have boats and airplanes and things, well, you're unlikely to just not have those in retirement, right? If anything, you're going to have more expensive ones. So if you lead an expensive lifestyle, you're going to need more, right? If you lead what I call the very comfortable, middle class lifestyle where you're making around six figures, you have a couple operating cars that probably not brand new, but food's never an issue, right? You can always provide for your family. Yeah, most folks that live in that's their own personal economy can continue that forward with 1.3 million in retirement. So I do think it is a good number kind of for everybody. If you aren't used to that sort of lifestyle, maybe you've always lived well below your means and you need a lot less in retirement. But I think it's interesting, to get your mind around what you personally think you need to be able to retire. Here's kind of the chart here. I thought this was kind of funny. In your 20s, you think you need 1.2 million, and you have 36K saved, right? In your 30s, think you need 1.4. That's right. When you start having fancy stuff in your 30s, right? Maybe your new car, maybe your jet ski, looking at a boat, that sort of thing. But you only have 68,000. So the currently saved is kind of funny because it really doesn't move much higher at any point, right? And then you get up to your 50s, which is kind of your prime career earning. You're probably making the most that you'll ever make. You need 1.6 million because they're projecting out that they're going to live that sort of lifestyle for the rest of their lives. But, if you're blessed to be in like a 4,000 square foot home while you raise your kids, you can make an argument you don't need that big home later on in retirement, right? You could downsize so your living costs goes down. And then you get to people that are actually in retirement, what they need, they're saying we don't even need $1 million, right? Because they're living well within their means at that point. So that's kind of interesting to look at. What you need to think about is the math behind it all when you think of cash flow. There's examples, and everybody's, every financial planner out there has a chart for you. But I want you to think of it this way. So, you can generate 5%. You can just buy an annuity if you want to, give your money to the insurance company and have them give back, less than that total amount over your life. You can do that. I don't know why anybody would do that. So we do what the insurance company does is invest your money and kicks off a certain amount of income. So at 5%, a $1.3 million portfolio will kick off $65,000 a year. Most people don't live off of annual numbers; they live off of monthly numbers. If you divide that by 12, it's $5,400. So you got $5,000 plus coming in from a $1.3 million portfolio without ever touching principal, right? You're just living off what it's kicking off. Social Security, there is full retirement age benefit of $36,027. You can see it off a straight Google search here. So you take your $5,400 you're getting from your $1.3 million, add $3,600 to it. That's right around $9,000 a month. Most people can get by with that in retirement on their own. If you're married, there's another Social Security benefit rolling in here, right? So you may get maybe at least half of that, another couple thousand a month. So even at the little over $1 million mark, you can have over $10,000 coming in the door, basically. If you wait, you see the difference between if you're retired age 62, the max benefit is $2,500 a month. If you wait 8 years of getting nothing, I got it. I mean, you got to think about that's 8 years of zeros. But if you wait till 70, you're going to get $4,500 a month, right? So it's it's not quite double. So a lot, depends on your current cash flow situation as well as your health and your hereditary, your family genes. If everybody lives to be 100, then you would certainly want to wait. If nobody lives past 70, well, then you would want to claim early, right? But all things being equal, you're going to make a lot more of money in retirement if you can wait a little bit longer. So again, every person and couple's decision is different. But all in all, I'll conclude with, when you think back about what you need, kind of start with the amount of money you need annually in retirement, divide that by 12, figure out what that's going to be. Most people have their houses paid off, or that sort of thing. So you're going to have a living expense, and then the rest of it's for you to basically spend. So you can work backwards towards those numbers. If you would like help with that calculation, then reach out to any of the advisors here on the team. We can help you run through that.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all we have for today's show. I'm Allison Ankerstar, and we'll see you back here tomorrow.